Hey, it's your real estate geek, Andrew Finney here. Today we're going to be chatting about FHA loan benefits and 7 wonderful things you can use today. To tell us more about this is Josh Coomer with Man Mortgage. Hey, and if you haven't already done so, please go ahead and give us those thumbs up and subscribe now. Thanks so much, and we'll see you on the flip side. Josh, thanks for coming by the office today and telling us more about the FHA loan benefits and 7 great things they can use today.
Absolutely. Well, thanks again for having me down here, Andrew. And today we are going to talk about the 7 benefits of using an FHA loan. So let's go ahead and let's jump on into it here for them. Okay?
All right, dive in.
So number 1, FHA typically requires a less down payment than your traditional conventional loan that requires a 5% down payment. FHA only requires a 3.5% down payment as a minimum. So that's a huge advantage for our clients out there. That allows them to take less money and have a fixed mortgage insurance, and I'll get into that here in a minute.
Okay.
So it's easier. Number 2, it's an easier approval process than on a conventional loan. So what do I mean by that? Easier approval process. It's just more flexible, allowing for higher debt to income ratios, things of that sort. So it's more open to approving you than on a conventional loan because it is backed by our government. So we're going to get into number 3. It has more flexible guidelines for credit scores, which I just kind of touched on. FHA allows for you to go down to, with us currently, a 580 credit score, and I know there's some companies that go under that 580.
Oh, wow.
It does require a 10% down payment and so on. So those are out there. Personally, we go down to a 580 on that.
And is that still 3.5% down?
The 580 it is, yes. 3.5% down on that.
Okay.
So on a conventional loan, it is a 620 credit score, so there's quite a bit of a difference. I mean, that's 40 points right there in credit score that will allow you to purchase or not purchase.
Well, 40 points could take a family a year to be able to come up from a 580 to 620 if they did everything right.
Well, and then on that conventional, you're going to get dinged over and over and over again for that credit score, from the mortgage insurance to your interest rates to everything else, and that's where FHA would still pick up those pieces. The mortgage insurance is fixed. It's at a 0.85%. It doesn't matter if you have a 620 or an 820 credit score. You're going to get the same mortgage insurance factor.
I just think that's really cool as a real estate consultant. I just got to throw it out there. I just think it's really cool because with that difference in credit score, that could be the difference between you guys being able to buy a home now and having to wait a year. And if you have to wait a year, the way that real estate's going right now, I mean, we're on June 1st of 2017 in this video, the way it's going is going up.
Yes.
Rates are going up.
Everything's going up.
Everything's going up. So, I mean, the idea is to build equity in yourself for your own personal wealth, your familial wealth, and just your peace of mind. So being able to get a home today is definitely a lot better. So I really appreciate you guys doing that and making this video today.
Absolutely.
Okay, so what were we at? Number 5.
So no, actually we're going to go on to number 4.
Number 4.
We can't skip 4.
I'm a little dyslexic.
4 is very important.
4 is very important.
So 4, FHA is more forgiving on a debt to income ratio. I kind of mentioned it a little bit earlier. So on an FHA loan, I could go all the way up to a 56.99% and still get you approved for an FHA loan. So that could help your client that's self-employed that may make more money than they actually show on paper because they write off a little bit more. I didn't say that. Nobody does that, right?
Never.
But I mean, that could help them qualify for more home. We're on a conventional, you're limited to about a 43 to 45% total debt to income ratio. So that allows for 10+% in a debt to income ratio to help you qualify, which is huge, huge, huge. So that brings us to number 5.
Wonderful.
Number 5, FHA is also more forgiving on your bankruptcies, your foreclosures, short sales, deed in lieu, any of these things that we have had in our past. On a conventional loan, we'll go FHA, foreclosures 3 years, conventional is 7 years.
Okay.
Short sale is 3 years FHA, 4 years unconventional. Short sale, same guidelines, 3 years, 4 years. Bankruptcy, Chapter 7. This is where it gets really, really important.
Okay.
Chapter 7 bankruptcy on an FHA loan. What was it? Chapter 7 bankruptcy on an FHA loan is 2 years. On a conventional is 4 years. Very, very important. Chapter 13 bankruptcy. FHA, you can do the loan while you're still in the bankruptcy after 1 year of payment into this Chapter 13 with the approval of the bankruptcy court.
No kidding.
Doesn't need to be discharged. You could still be in the middle of your bankruptcy, just paying into it for 1 year, showing on-time payments, and you can get a new FHA loan.
That's
Conventional,
awesome.
not a chance.
Well, I really appreciate on point number 5, kind of giving us that conventional versus FHA and FHA versus conventional differences right there, especially on wait times, because again, the sooner you can be able to get into your new place, the more equity that hopefully you're able to build in yourself going forward. And that's why we do this, is to help educate and help you and empower you to make the right decision with the comfort and confidence that you need. So are we done with point 5?
So point 5, yes, we
Okay.
were. So we're going to move on to point 6.
Cool. What is it?
So point 6, and I kind of touched on this already a little bit in the video, but is mortgage insurance. So FHA comes with a fixed mortgage insurance factor of, I'll just do minimum down payments, 3.5% on an FHA loan. Your mortgage insurance factor is going to be a 0.85%. That is what FHA has set as a standard for all borrowers, not depending on credit score. Conventional, on the other hand, is completely different. That's based on your loan to value and your credit score, and what your factor is going to be. I've seen them up to 1.9%, which is over double
On a
on a conventional loan with a 620 credit score and 5% down. It came in at like 1.8, 1.9% factor, which was over $300 a month on less than a $200,000 house.
Ouch! Sign me up for FHA, Josh.
Absolutely.
Sign me up.
And the FHA mortgage, in fact, I just did this one yesterday, was $140-something opposed to $300.
That's massive, especially when you're talking about a monthly mortgage amount and debt to income ratios and such, and how much home you can get.
Yeah, but and that was about mortgage insurance, and I know we're doing seven steps, but I also
Yes,
wanted
sir.
to point out that interest rates are also better on FHA than they are on conventional with those credit scores.
Is that because it's a federally insured loan?
Yes, it is.
Oh, okay. That makes a lot of sense.
Yeah, and the mortgage insurance that's backing it, it's either private or governmentally insured. So those are the difference. That's what's allowing us have a less risk given a better interest rate.
Thanks, Josh. Appreciate it.
And then we're going to do it number 7. So, what do we got for number 7? I want to let you read number 7 here.
Oh, I get to read number 7.
You got to
Okay.
read number 7.
So number 7 is really cool because a lot of people think that FHA is about a first-time home buying program. And Josh has shared with me earlier today actually some really interesting things about being a first-time home buyer. If you've not lived in a home or owned a home rather, we all hopefully live in one. But if you haven't owned a home in like the last 3 years, you're technically considered a first-time home buyer, right?
That's correct.
That just blew my mind. I was like, well, okay, I guess. But that's cool because that's how FHA looks at it, and that benefits you. So you don't have to be a first-time home buyer. This program's open to anyone. And the only thing that you need to do is check with your local lender and your local real estate agent about what county limits are in place where you live. Like, for example, in Clark County here in Las Vegas, Nevada, our max loan limit is $287,500 for an FHA loan. In Virginia, it can be $600,000. I mean, it's just different everywhere you go, so please check into that.
Absolutely.
Did I get that right?
You absolutely got it right. You nailed it on the nose. You nailed it on the nose. I mean, in California, your FHA limit's at $729,000.
Really?
$729,000. So, I mean, it just depending on the states, there's a vast difference from state to state of what the limit is. So that was a very, very good point. In fact,
Thank you.
Andrew here is the one that brought that one up and added it to our list. So thank you for that. That was a good one. So, I mean, at this point, now it's up to you as the consumer. Once you're getting in and you're getting qualified, you know, are you looking for the less money out of your pocket to move forward with the lower payments? It's all up to you and what fits your life and what you're looking for. I mean, that's the important thing. You're the only one that can make that decision. All I can do is give you the tools to make that educated decision.
With the comfort and confidence they need to make an informed decision.
Absolutely.
Certainly appreciate that.
Absolutely.
Yeah. Okay, Josh, so if they're in California, Nevada, and they want to reach out to you, what should they do?
Absolutely. Well, again, Josh Coomer here, Man Mortgage. I'm going to go ahead and give you my cell phone number. Give me the call in there, 702-491-2208. I would love to answer any questions that you may have for conventional VA, FHA, jumbos, off-the-wall products, whatever you have. I'm here to help. You can always check out my website as well, see what I'm about, what our company's about, and so on at www.joshcoomer.manmortgage.com. Or always just shoot me an email to say hi and let me know how your day's going. I'd always love to hear from you.
Absolutely.
And, you can always email me at josh.coomer@manmortgage.com.
Josh, thank you so much for coming by the office today and sharing the FHA loan benefits and especially 7 things that they can use right now. Yes. As always, if you've enjoyed this real estate geekness with some lender goodness, please go ahead and give us those thumbs up and subscribe now. Thank you so much and enjoy an amazing day.